Hi! Bitcoins. In this video, we are going to discuss all about Bitcoins. What is Bitcoin? Is it legal? How to invest in it? And how do we earn through Bitcoins? And many more details about Bitcoins are covered in this video. Watch the video completely to learn all about Bitcoins. And if you haven't subscribed to the channel yet, now is the time to do. A type of currency where the transactions are verified and records are maintained by a decentralized system using cryptography is called cryptocurrency. There are about 6,000 cryptocurrencies, and Bitcoin is the best known cryptocurrency that was created in the year 2009 by an anonymous person using the alias Satoshi Nakamoto. Bitcoin is one of the first digital currencies that uses peer-to-peer technology for instant payments between people or businesses. It can be bought and used as a currency or as a type of investment. The all-time high price of Bitcoins was on March 13, 2021, where one Bitcoin was worth $60,605. Bitcoins are created and held electronically on computers, so they are not paper monies like dollars, euros or yen controlled by central banks or monetary authorities, and hence this is a global currency. The Commodity Futures Trading Option, that is CFTC in the US, designates Bitcoins as a commodity in response to a Bitcoin exchange offering derivative contracts or options on the value of cryptocurrency. It is difficult to categorize Bitcoins because it is still new and different from other assets available to market participants. Bitcoins has several attributes that sets it aside from traditional currencies as a pan-global means of exchange. The attractive thing about Bitcoins is that anyone with a computer can set up a Bitcoin address to receive or transfer Bitcoins in just seconds. And since it is anonymous, it allows users to maintain many addresses, and setting up an address requires no personal information. However, some companies are beginning to buy Bitcoins due to its growing influence. Last October, for example, the popular online payment service PayPal announced that it would be allowing its customers to buy and sell Bitcoins. The physical Bitcoins you see in the photos on the computers are just a novelty. They would be worthless without the private codes that are printed inside them. But most of the hype about Bitcoins is all about getting rich by trading them. Each Bitcoin is a computer file which is stored in a digital wallet app on a smartphone or computer. People can send Bitcoins or just part of Bitcoins to your digital wallet, and you can send and receive the same way. Every single transaction is recorded in a public list called the blockchain. This blockchain prevents people from spending coins they do not own or making copies of it or undoing any transactions. To understand how the cryptocurrency works, you need to know some of the following terms. The first term is blockchain. Bitcoins are powered by open source code known as blockchain, which creates a shared public ledger. Each transaction is a block that is chained to the code, creating a permanent record of each transaction. The second term is private and public keys. A Bitcoin wallet contains a public key and a private key which works together to allow the owner to start and sign transactions, providing the proof of authorization. The third term is Bitcoin miners. Bitcoin mining is a process of adding new transactions to the Bitcoin blockchain. Miners, or the members of the peer-to-peer platform, confirms the transaction using high-speed computers within just 10 to 20 minutes. It is definitely a tough job, and people who choose to mine Bitcoins use a process called proof of work, which deploys computers in a race to solve mathematical puzzles that are used for verifying the transactions. The interesting thing here is to entice the miners to keep racing to solve the puzzles and support the system, the Bitcoin code rewards the miners with new Bitcoins. Thereby, the miners are paid in Bitcoins for their efforts. So this is how new Bitcoins are created and new transactions are added to the blockchain. Bitcoins coin's value follows the law of supply and demand. And because the demand always fluctuates, there's a lot of volatility in the cryptocurrency's price. Besides mining bitcoins, which requires technical expertise and investment in high-performance computers, most people buy bitcoins as a form of currency. Bitcoins and other cryptocurrencies are legal in many countries around the world, but the central banks in most countries have warned the citizens that Bitcoins and other cryptocurrencies are not legal tenders and not guaranteed by any government. Thus, any such transaction is at the individual's own risk. There are some countries that have banned transactions in cryptocurrencies such as Bitcoin. These countries include Algeria, Bolivia, Egypt, Iraq, Macedonia, Morocco, Nepal, UAE, and Vietnam. There are some countries that do not completely ban cryptocurrencies but have restrictions, and that makes it difficult for transactions to take place. For example, Qatar and Bahrain prohibits cryptocurrency, but citizens may transact in the cryptocurrency outside their borders. Countries such as Bangladesh, Iran, Thailand, Lithuania, Lesotho, China and Colombia prohibit cryptocurrency transactions by imposing restrictions on financial institutions that may ease them. Bitcoin is not the only available cryptocurrency, but its market capitalization is more than twice the value of the next 10 largest cryptocurrencies combined. Bitcoin's market cap is over $1 trillion as of March 2021, followed by Ethereum at over $212 billion and XRP at over $56 billion. As of March 2021, there are 17 different cryptocurrencies with market capitalization of at least $1 billion. Bitcoins are generally used as an alternative investment, helping diversify a portfolio apart from the stocks and bonds. You can also use Bitcoins to make purchases, but the number of vendors that accept the cryptocurrency is still limited. Big companies that accept Bitcoins include Overstock, AT&T, and Twitch. You may also find some small local retailers or certain websites that accepts Bitcoin. PayPal has announced that it will enable cryptocurrency as a funding source for purchases this year and for financing purchases by automatically converting crypto holdings to fiat money, that is, a government-issued currency for the users. You can also link your debit card to your crypto account, which means you can use Bitcoins the same way you would use a credit card. Most people buy Bitcoins via exchanges such as Coinbase. Exchanges allows you to buy, sell and hold your cryptocurrency and also helps in setting up your crypto account. Regardless of where you buy your Bitcoins, you will need a digital wallet in which you can store them. Bitcoins can be stored in two kinds of digital wallets. One is hot wallet and the other is a cold wallet. Hot wallet means the digital currency is stored in the cloud on a trusted exchange or provider and accessed through a computer browser or desktop or a smartphone app. Whereas cold wallet is an encrypted portable device much like a thumb drive that allows you to download and carry your Bitcoins with you. Basically, a hot wallet is connected to the internet and a cold wallet does not require internet. But you need a hot wallet to first download the Bitcoins into a portable cold wallet. Just like how you download pictures using the internet and then you save it in your thumb drive for your future use. The arrival of Bitcoin is the first fully functional and digitally native cryptocurrency in the world that gave birth to a new asset class altogether. Since its inception just a decade ago, cryptocurrencies like Bitcoins have established themselves as a good asset class because of its high returns and top performing asset and its alternative hedge to inflation. stocks, you can just buy and hold Bitcoins as an investment. You can even do it in special retirement accounts called Bitcoin IRAs. No matter where you choose to hold your Bitcoin, people's philosophies on how to invest in Bitcoins always varies. Some people buy and hold it for a long term, and some would buy and aim to sell it after a specific price rally, and others bet on its price decrease. Bitcoin's price over time has experienced huge price swings, going as low as $5,165 and as high as $28,990 in just the year 2020 alone. Cryptocurrency exchange is a platform which helps you to buy and sell digital currencies. Unlike the regular stock exchanges, crypto exchanges are self-regulated and they operate 24/7 throughout the year. While crypto-based funds may add diversification to crypto holdings and decrease risk slightly, they still do carry substantially more risk and charge much higher fees than the broad-based index funds with histories of steady returns. There are 4 ways to get Bitcoins. One is cryptocurrency exchanges. Coinbase is the largest cryptocurrency exchange, trading more than 30 different cryptocurrencies. The second one is investment brokerages. Robinhood is the first mainstream investment broker to offer Bitcoins and other cryptocurrencies. The third one is peer-to-peer purchase. True to its original spirit, you can buy Bitcoins directly from other Bitcoin owners through peer-to-peer tools like BISQ, Bitquick, and localbitcoins.com. The last one is Bitcoin mining. You can earn Bitcoins through mining, but the technical expertise that is required and the cost of the computers makes this option out of reach for most people. Once you own Bitcoins, you can transfer them anytime and anywhere, reducing the time and potential expense of a transaction. It is easily accessible, that is, cryptocurrency exchanges makes it easy to buy Bitcoins. It is easy to cash out and sell your Bitcoins if you need money, hence it is very liquid. It has potentially high returns, that is, Bitcoins tend to peak at extremely high prices, and it is very secure. You always know where your Bitcoins come from and where it goes. Bitcoins are unregulated. The use of Bitcoin itself is unregulated, leaving you legally unprotected in case if anything goes wrong. It has limited practical use. You cannot use your Bitcoins to buy things. It must first be converted to regular money. Bitcoins are extremely volatile, that is, the price can drop very quick. Its best security system also stands as a big disadvantage since it is impossible to reverse any transactions and your Bitcoins cannot be recovered in case if it is stolen from your digital wallet. Bitcoins are incredibly speculative and volatile, but personally what interests me is the Bitcoin mining. Though it is expensive, it could be super thrilling, but I guess stock trading can also give you a similar thrill, and picking the stocks of established companies is definitely less riskier than investing in Bitcoins. Frankly speaking, Bitcoins are not different from any other high-risk investment option. That means whether you should be investing on Bitcoins or not totally depends on your own risk profile and your investment goal. However, we should also accept the fact that Bitcoin's value is solely determined by investor interest. That is, unlike investing in anything else, cryptocurrency is not linked to any tangible asset. Bitcoin's entire value is only based on people believing that it has value. I would say you should treat it like any other investment option and avoid trying to time the market. Instead, it is advisable to make periodic investments to earn out your returns. I hope this video was useful for you to learn all about Bitcoins. Do share it with your friends and family for those it might be useful too.